Hitting the take profit has also become quite difficult. Full take profit now, 1 to 21, meaning a 21 risk reward. 21 risk reward. The internet is not working well. All right. All right then, 20. But I would have exited the trade at this external range liquidity. If the market gives confirmation after entering a trade, learn to always place your take profits at the external range liquidity, or at the internal range liquidity. After reaching the internal range liquidity, you should move the stop loss of your trades into profit. That is, by moving from a higher time frame down to a lower time frame to determine whether those zones are valid or invalid. You should work in exactly this same way, meaning this is needed to find the truly valid zone and to enter a trade. Working by moving from a high time frame down to a low time frame is exactly like this. Alright, and the next one? The next one is the high risk and low risk breakout structure. Alright. In other words, since it is high risk, I do not recommend that you enter the trade. Alright, if it is a high risk breakout, working on it is wrong. Meaning it could also be a fake breakout. It's high risk. You can see. Alright. Meaning a liquidity sweep breakout. But there hasn't been a breakout here. Why? Look. This candle is closing with a wick. If it closes with its shadow, then this is considered a high risk. But if this happens to close with its body, it's considered a low risk. You could consider this to be a breakout if... But as you can see, there was no breakout here. Alright, if a situation exactly like this were to happen, the market ended up closing with its shadow. But where does the breakout happen? Now, in order for us to expect a breakout to occur, the next candles need to actually break out of this candle, meaning with its body. And as you can clearly see right here, the candles that followed it didn't break it with their bodies either. Meaning it just left its shadow behind, and then it actually started moving towards a buy. There hasn't been any sort of breakout here, so it's high risk. All right. Now you could take a look at it. Liquidity sweep. Is it a breakout or is it not? Not right now. There hasn't been a breakout here either, and the last low candle was not able to break out right here. And it wasn't able to break out of this candle either. And we have this particular candle breakout. The breakout happened right over here, meaning it is breaking it with its body. In a situation like this, you can definitely consider it a breakout. And right over here, we also have a liquidity sweep breakout. Is there a breakout happening here? Yes, there is. And this candle is closing with its shadow. And the candle that actually closed with its shadow is being broken by the next candle's body. And in this case, we can consider it to be a breakout. And in the exact same way, we have a liquidity sweep and a breakout. All right. If the market breaks out using its shadow, that's high risk. It's considered high risk. There's a shadow here, and the market is going and moving towards a sell. Okay. Higher high, higher low, higher high. But there hasn't been a breakout here. The reason is the market didn't close with its body. It just closed with its shadow. And this is high risk. High risk. Okay. A lot of people think there was a breakout right here and call it inducement. Well, this is not an inducement. And now we just need to wait for this candle to break out. This candle was not able to break out. Now we need to wait for this candle. With this candle too, the market is closing with its shadow just like that. If it had closed with its body, we could have considered it a breakout. But it is closing with its shadow. And there wasn't a breakout here either, meaning it's high risk. Okay, so many people will think this is an inducement, but this is not an inducement. Okay, inducement, and the market is currently moving. It's giving a little reaction, and it has cleared the inducement. And the OCL, and a breakout. The first, second, and third confirmation. Okay, is the market going to move towards a sell now? No. This is high risk. This is manipulation. In this kind of situation, the probability of the market going to a buy is very high in this kind of situation. Okay. Next, liquidity sweep and breakout. Here it is, breaking out with a candle. Okay, breakout. And the next one, we should have a second breakout, but the second breakout is closing with its wick. And this is also high risk, high risk. Okay, At times like this too, if the market reaches inducement and there is a breakout, we shouldn't enter a trade. It's high risk. Inducement, breakout? No, this is not a breakout. This is manipulation. The probability of the market going to a buy will be very high in such a situation. That's why you should always wait for it to close with its body. Okay. Today, from my previous day, or 2 or 3 days ago, I entered a trade for a sell position. At that time, I made a profit of more than 20 risk-reward. I will also teach this with an example right now. Okay. The market is in a sell trend, and we need a key level to enter a trade. Okay, key level. Support on the 4-hour. Support on the 4-hour again? Okay, we switch to the 1-hour. That is, we need to switch from a high time frame to a low time frame. Alright, take a look. This was an open candle level on the 4-hour. Okay. But this is already played out on the low time frame. I've checked this myself, and you can see this too. There's an imbalance here, and the market is reacting. We won't enter this zone. We had an open candle level on the 4-hour. But this is also invalid. And we have an open candle level, a 1-hour candle. Alright, now, in order to make this zone smaller, we are going to have to switch to a lower time frame once again. We switch to the 5-minute. Take a look. It's an invalid zone on the 15-minute too. Meaning the market is reacting. What should we do in this situation? We are switching to a low time frame again. Okay. 4-hour, 4-hour. Open candle level. We switch to the fines in it. On the 5-minute, this is played out, our zone played out, it's an invalid zone. And since it became an invalid zone, this becomes an inducement. An inducement. Inducement. Meaning the zone played out, an invalid zone. Inducement. Liquid, meaning liquid. And in this 4-hour zone, there seems to be an order block here. We switch to the 1-minute. A valid 1-minute order block. And there's an inducement here. If the market comes to this zone, we should enter the trade with confirmation. Or it sweeps the inducement. It's definitely going to sweep this inducement. Key level, the probability of it reaching the key level might be lower. That is why we need to enter the trade with confirmation. If there's no confirmation, we don't enter the trade. The market swept the inducement. And breakout. Breakout. All right. And now we have confirmation. Breakout. Liquidity sweep. And we have a key level order block. No, not just a month or two. Okay. This is high risk. The reason is this market is closing with a wick, not with the entire body. Okay, so now this candle. If the following candles close with their bodies, we can consider it a breakout. And now it's a breakout. This is considered a breakout. Now, many people think there was a breakout and inducement sweep here, and another breakout here, and we have a key level order block. From the resistance. If the market comes to this point, they will enter a trade. And the market will take out their stop losses. That is why you should always pay close attention to the market whenever a breakout happens. They don't work here anymore, no. This right here is the inducement. The reason is that there was no breakout here. The candle didn't break through with its body. And the next one right here breaks through with its body, giving us a second confirmation. And there is an inducement too. Now, once the market clears out the inducement, we have to enter the trade with confirmation.